Basically, first we did income from salary, it is charged to tax under section 15. Under section 16, you get certain deductions. What are the three deductions that you get under section 16 for income from salary?
Standard deduction, entertainment allowance, and professional tax.
Entertainment allowance is for
It's for government employees only.
maximum up to 5,000.
What? 5,000.
So entertainment allowance is lower of the three amounts. Which three amounts?
Uh, Amount received, 1/5 the salary, rupees
Or
5,000.
20% funds with the salary or amount received.
Yeah. And professional tax?
2,500 maximum deduction, and the employer pays the employee. So it will be charged as income that is chargeable to tax.
If it is paid by the employer on behalf of the employee.
Employee.
Professional tax may you have to also remember that it is for those people who are earning their income by way of services that is being provided to others, like if they're earning their income through salary, if they're earning their income through wages, if they're earning their income by being a doctor, lawyer, chartered accountant, then these people have to pay professional tax, and it is deduction is allowed only on receipt on based on the amount that you have spent. Okay. Okay. Now there were three allowances that I had left and I did not do it because I wanted you all to practice some things. So there is one allowance that is retirement benefit, not allowance, exemptions. That is retirement benefits. And for retirement, you get two benefits, that is gratuity and pension. We will study it one by one. So gratuity, what is gratuity? First, let's know what is gratuity. Can you tell me what is gratuity?
It's an amount paid by the employer to the employee to
So,
express his gratitude.
so if any employee is working with an employer for more than 5 years, okay?
Hmm.
If an employee is working with the employer for more than 5 years, so at the time that this employee is leaving the company, the employer would give this employee over and above his salary some extra amount to express his gratitude or to express his happiness for the long service that this employee has rendered to the employer.
Yeah.
Okay. Now, employer is giving this money to the employee.
Yes.
Okay. If the employee is retiring and the employer is giving the money, then this amount of gratuity that the employee has received is exempt from tax. When I say
Okay.
it is exempt from tax, that means nothing will be treated as income.
Okay.
Will be exempt from tax. Government say this your employer has paid you out of happiness. Okay, so that you can do something ahead, and now you're already retired. So now you need money because you will be having no other source of income.
Hmm.
So now you please don't pay tax on this amount.
Okay.
Okay, so in gratuity, when you're leaving your employer after 5 years of service and at the time of retirement, you're getting the amount of gratuity, then it is fully exempt from tax.
Hmm.
But while you are in service and your employer has paid you something out of gratuity, then it is fully taxable. Are you
Fully taxable.
fully taxable? While you are still in the service and the employer has given you something out of happiness,
Okay.
then it is fully taxable, considered as your income. When you're
Hmm.
leaving your employer and you're going and you're receiving this money on retirement, then it is fully exempt. Are you with me?
Okay. Yes.
Now, Zara, are you with me?
Yes.
Okay. Now, when this gratuity is there, we see two things. Okay. Whether it is a government employee or it is a non government employee. If it is a government employee, so whatever gratuity has been received by him, it is fully exempt under section 10, subsection 10 1. 10 10 1. If you are a government employee and you have received gratuity, this gratuity is fully exempt under section 10 10 1. Are you with me?
Yeah.
Yeah.
Any any government entity is always covered by the Gratuity Act. Okay. Now, when you're leaving the company, do you think any employer would be willing to give the employee anything as a token of gratitude?
Yeah.
All the employers will give the employee something as a token.
No.
There would be some who would be giving
Only
and
special.
who would not be giving. But the Income Tax Act or the Trade Union Act says that the employees who have served you for a long period of time should ideally receive something when they're leaving you and going, because they have spent a portion of their life serving you. Are you?
Correct.
So if it is a big company, it will be covered by the Gratuity Act, which says how much gratuity should be given, and it should definitely be given. So if your organization is covered under the Gratuity Act, then even if you don't want to pay, you still have to pay. Are you with me?
Okay.
But there are certain organizations that are not covered under the Gratuity Act. So if these organizations are not covered under the Gratuity Act, it solely and solely depends on the organization whether they want to pay or they do not want to pay.
Okay.
Okay? If they are not covered under the Gratuity Act and still if they are paying gratuity, then the amount of exemption is different. If you're covered under the Gratuity Act and you're paying gratuity, then the amount of exemption is different. Are you with me?
Yeah.
Okay, fine. So gratuity, when is it exempted?
Only if received on
When it is
retirement.
received on
If
retirement,
it is received in retirement, and if it is received during the service, then it is.
taxable
Fully
full.
taxable.
If it is received during the service, then it is fully taxable. Now we talk about gratuity. If it is a government employee, then it is fully exempt under section 10 10 1.
Hmm.
But if it is a non-government employee, then we see if he is covered under the Gratuity Act or he is not covered under the Gratuity Act. Okay?
Okay.
Okay. If the employee is covered under the Gratuity Act, then what is the amount of exemption that we would give him? The amount of exemption that we would give him is the gratuity received. Are you with me?
Hmm.
Or 15 days salary. Please be mindful of the words that I'm using. Gratuity received or 15 days salary for every completed year of service. 15 days salary for every completed year of service, or 20 lakh, whichever is lower. I will explain you this part again. Okay, first let's go word by word. If you are covered by the Gratuity Act, then what is the exemption?
Actual
As
gratuity received.
Or
Fif-
15
15 days salary for every completed year.
years of service or
a part thereof in excess of 6 months. I will come to the highlighted part. Can you please repeat again?
15 days salary
Days
for every
salary for every
completed year
completed years of
of
service.
service.
Or part thereof in excess of 6 months. I will say these lines. I will explain you the meaning of these lines. Can you please repeat this again?
15 days salary
For every completed year
at
of service,
years of service.
or put or
Part thereof in excess of 6 months. Repeat, please.
or part
Fif-
of excess of 6 months.
Can you please repeat this line for me again?
15 days salary for every completed year of service or
Or
part thereof in excess
in
of 6 months.
6
Or
months.
20 lakh, whichever is lower.
Hmm.
When I say 15 days salary, that means for every completed year of service. So if you've completed 1 year, you are going to get 15 days salary. So 15 divided by 30 into the year's salary.
Hmm.
15 days salary. So you are going to take the salary that is last drawn.
Okay.
Okay. And instead of 30, if the employee is covered by the Gratuity Act, we divide it by 26. Say the employee was receiving 1,000 salary. So can you tell me 15 days salary would be how much? It would be 500
Hmm.
if it is divided by 30. If the
Yes.
employee is receiving 1,000, what would be 15 days salary if it is divided by 26?
Yes, but why are we taking 26 or 30? What is the reason?
And this is what I'm explaining you. If I divide it by 26, what is the amount?
577.
577. That means if I divide by 30, the exemption would be only 500.
Hmm.
If I divide by 577, sorry, I'm very sorry. If I divide by 30, the exemption would be 500. If I divide by 26, the exemption would be 577.
Okay.
Yes? So tell me,
Hmm.
if an organization is covered by the Gratuity Act, they would want to give less amount of exemption or more amount of exemption.
More amount of exemption.
That is why we divided by 26.
Miss, it is always these numbers, no? They'll not change.
If it is covered by the Gratuity Act, the amount of exemption would be actual received or 15 days salary for every completed year of service or part thereof in excess of 6 months or 20 lakh, whichever is lower. Are you with me?
Yes.
Okay. 15 days salary, na? So the salary over here would be basic plus DA. What would it be?
Basic plus DA.
Basic plus DA. Now, come on, let's go do again. Let's come over here. Gratuity. When is it exempt?
Only if received on retire.
If it is received during the service,
Then it is taxable.
fully
Full
taxable. If it
well,
is received by a government employee, it is
it is
fully exempt under section.
10, 10,
10,
1.
10, 1.
If it is received by a non-government employee, then what would you see?
Covered by
Covered by Gratitude Act, not
not
covered by
covered by
Gratitude.
Gratuity Act.
If it is covered by Gratuity Act, what is the exemption?
Actual gratuity
Actual
received
gratuity received 50
15 days
days.
last salary of the
15
completed
days
years of
salary
service.
for every completed year of service or part thereof in excess of 6 months. These are the words that you're going to use. Say,
15 days salary for every
For every
completed
completed year of
or part
service or
thereof.
part thereof in excess of 6 months.
okay, or 20 lakh, whichever is lower.
Hmm.
Okay, and salary over here means what will you take?
Basic plus DA.
Okay, but if you're not covered by the Gratuity Act, then the exemption would be actual amount to receive of 15 days salary for every completed year of service or part thereof in excess of last 6 months, but the salary that you would take using the last 10 months average salary.
Hmm.
Here the salary you will take is the last drawn salary.
Hmm.
And here the salary that you would take the last 10 months average salary. We'll do a practical sum that will help you understand it. But these are the provisions. And over here, because it is not covered by the Gratuity Act, the month would be 30, not 26. I hope you're with me.
Yes.
And over here, the salary would be basic plus DA, that is forming a part of retirement benefit, plus commission percentage. Three things would be there. I hope you're with me.
Mhm.
I hope you're with me.
Yes.
Okay, fine. So over here, what is the salary? Basic plus DA. Over here, what is the salary? Basic plus DA plus commission. DA should form a part of retirement benefit. Over here, when
Mm.
you take salary, it would be the last drawn salary. Over here, when you take the salary, it would be the last 10 months' salary. I hope you're
Mm.
with me.
Yes.
We were using this statement, right? What was this statement? 15 days salary for every completed
15.
year of service or part thereof in excess of 6 months. I will explain you this in detail, but before I explain you this completed year of service, I want you to write the provisions and then I will directly take you to the sum or memorize it alternatively.
Or part thereof in
Of in excess of
excess
six
of.
months, this is applicable over here only. But if it is applicable over here, any fraction of the year is ignored. Miss, please, we are not understanding what you are trying to say. If your organization is covered by the Gratuity Act, then the completed year of service is 24 years and 5 months. So we will take completed year of service 24. I hope you're with me. This 24 years or 6 months, then it will still be taken as 24 years, the completed year of service. And if it is 24 years and 7 months, so or part thereof in excess of 6 months. So anything that is in excess of 6 months will be converted to another year into 25. So you take 15 days salary, completed year of service, okay? Completed year of service would be 24 or 25 depending. I hope you're with me.
Yeah.
Okay. This is if it is covered by the Gratuity Act. If it is not covered by the Gratuity Act, the fraction months are ignored. So 24, 24, 24 is only Ava, 24, 24, 24 is only what we will take. Are you with me? There
Yes,
are
miss.
certain notes that you have to see. Gratuity, if received during employment, is fully taxable. If it is received after employment on retirement, it is fully exempt. Okay. And but there are provisions for it. If you're a government employee, fully exempt, non-government employee, there are provisions covered by the Gratuity Act, not covered by the Gratuity Act. Under any circumstances, the cap on receiving the exemption is only 20 lakh. I have shared this as a notes to you. Now, keeping this in mind, we will go to our worked example. Of your video. Covered under the Payment of Gratuity Act 1972, employee retires on 30th 8 24. Previous year is what? 24 25. Assessment year 25 26. He is retiring on 30th 8 24. I hope you're with me. Are you
Yes.
with me? Please, girls, are you with me? Reply.
Yes, miss. I said yes.
Very good if you're with me. So he is covered under the Gratuity Act. So if it is covered under the Gratuity Act, can you tell me the provisions? 15 by 26 into last salary. Yeah.
Yeah,
Yes.
miss.
At the time of retirement, he was getting a basic salary of how much? 10,000 per month. And DNS allowance was 10,000, 10% of the basic salary. So salary for this would be basic plus DA, last drawn salary. So last drawn salary is 11,000 per month. I hope I'm clear.
इस 10% डीए का 10,000 पे करे ना.
Yeah, because we will take monthly na last drawn salary.
ओके.
Mazhar,
वो है क्या पैटर्न है कि वी हैव टू फॉलो दिस.
no, there's no fixed pattern. So the gratuity is amount received of 15 days salary, 15 days salary for every completed year of service or part thereof in excess of 6 months, and salary is basic plus DA. That means it would be 15 by 26 into 11,000. I hope you're with me. Now into, I want to find out the completed year of service. Are you with me? He had joined the company on 1/4/2006 and he was paid gratuity of 125,000. I hope you're with me.
Yeah.
Yeah, miss, I'm done.
So 125 or this or 20 lakh, whichever is earlier. Now my target is to find the completed year of service. So 06 to 07, 07 to 08, 08 to 09, 09 to 110, 11 to 20, 10 years more. Then 21 to 22, 22 to 23, 23 to 24, and 24 to 25. So 10, 11, 12, 13, 14, 15, 16, 17. 17 years. And here he had retired on what date? 30th date. That means April, May, June, July, August and September. So 17 years and 6 months is his completed year of service. So I am going to take only 17 years. I hope you're with me.
Hmm.
So into 17. Now when I put this on calculator, so it is 15 into 11,000 into 17 divided by 26. So it's coming up to 1 lakh 7,884. Is that the amount? Yeah, 885. So exemption is how much? Least of the three. Exemption is this much. So his taxable gratuity will be how much? Gratuity received is how much? 1,25,000 less exempted under section 10(10). And how much is the exemption? 1,07,000. How much? 885. So what would be the part that would be considered as income? 17,115. I hope I was very clear.
Hmm.
Okay. Now, the next exemption under section 10(10), which is about pension. Do you know what is pension actually?
Yeah,
Anyone?
after retirement, the amount that is given by the government to the government servant.
Okay. So you receive some regular income after retirement from your employer. You are receiving this from your employer. It is not necessarily the government. So whatever money you receive after retirement is called pension. Okay. So when we talk about pension, there are two types of pension. One is the uncommuted pension, and other pension is called the commuted pension. What is the difference between this uncommuted pension and the commuted pension? Uncommuted pension is paid like salary. It is paid every month to the employee. I hope you're with me.
Yes.
Uncommuted pension is paid every month to the employee. It is like salary and it is fully taxable for everyone.
Pension baby.
Huh. It is fully taxable for everyone because it is coming to you every month. Whether it is
Okay.
a government employee or whether it is a private employee, it is fully taxable to everyone. Hope you're with me.
Yeah.
What is this? This is uncommuted pension.
Okay.
When I talk about the commuted pension or why when I talk about lump sum pension, this is one time money that is paid in advance by the employer to the employee for future years. That means the employee does not want it monthly. He tells me, I don't want monthly. I don't know how many years I'll live or not. You please give me one time lump sum amount. They don't give me anything.
Okay.
So now this is partially exempted and partially not. It depends on who you are. I hope you're with me.
Okay.
So there are these exemption rules for the commuted lump sum pension. If you're a government employee, does not matter whether you are a central government employee or a state government employee or a local employee. If you're a government employee and you're receiving lump sum money from your employer, then it is fully exempt. Whatever lump sum you are getting is not taxable at all. I hope you're with.
Yes.
If you are another employee, then we see calculate the exemption depending upon whether you're receiving gratuity or not. If you're another employee, so we will see whether you are also receiving gratuity on employment or you're not receiving gratuity on employment. If you're other employee and you're not receiving gratuity on employment, that means you're only receiving retirement. So half of your full pension is exempt. That means half money you don't have to pay tax at all. But if you're also receiving gratuity, you're also receiving pension on employment, on retirement, then one third of the amount is exempt. Knowing and learning these provisions with a continuous practice is a must. If you know the provisions, you apply it once or twice and you keep on doing it, like if the way we are doing it now, you will be able to retain it. Okay? Before I go ahead, I want you to read, try to give it back to me, and then I take you to the other part of the provision. Take some time, read and digest. Okay? So now, sometimes it happens that he does a part portion as monthly and part amount of the pension is commuting. That means he is withdrawing. Let's see what I'm trying to tell you. Suppose the full pension is 10 lakhs. Are you with me?
Yeah.
The full lump sum pension is 10 lakhs.
Yes.
Okay. So he does not want entire 10 lakh. He's commuting only 60%. That means he wants only 60% lump sum, rest he wants to receive monthly.
Hmm.
Okay. In that case, the amount that he is withdrawn is how much?
6 lakh.
So 6 lakh divided by the percentage commuted, that will give you the full value of your pension.
Okay.
Okay. So they will never give you the full value of pension directly. They will give you percentage commuted.
So we'll have to do 10 lakhs into 60% and the amount is?
This they will give you. Percentage commuted is 60% or 40%.
Huh?
This divided by 60% will give you the full value of pension. I hope you're with me.
Yes.
Okay. Let's